Okay, that's brilliant. So welcome in this webinar. In this webinar, we are going to speak about the decoding the CFDs or decoding the CFDs. I hope also you can see my screen as well. Is it visible for everyone? That's brilliant. That's brilliant. Okay, so welcome everyone, and I will be the host for this webinar for today. So before we start our webinar for today, I just want to know your level of experience in the trading. So I'm going to launch a poll asking you about what is your level in trading. So I would kindly request every one of you to answer this question in order to know how to go through the content step by step, and in order also to give the best value in this webinar. So what we have here, okay, 60%, 62. All right. Okay. So we would say 69% voting. We still, I need 100% voting, guys, so we can know what is our level. Okay. So I believe we are 62% beginner level, and the 37 is intermediate level. So that's totally fine. The main reason for asking is just I want to, start from the very basic level, from the scratch, as we can say, to know what are the CFDs, how we can jump to the CFDs, and so on. So I believe that if we are beginner level or we are intermediate level, so we are, accumulating the knowledge in order to trade. Okay, and this is the best thing. The best thing in trading is that you do not start trading without proper knowledge. Okay, because trading is just like as any profession in the world. It requires a knowledge at the beginning, and after the knowledge, once you get the knowledge, once you get the proper knowledge, you will get, I would say, the easiest part in trading is to get the knowledge. The easiest part in trading is that you get the knowledge. The most difficult part in trading is the execution of that knowledge. Okay. Will the recording be shared? Yes, yes, yes. Yeah, it will be shared. So in today's topic, I'm going to speak about decoding of the CFDs. As I mentioned, when it comes to CFDs industry, when it comes to trading, the easiest part, and believe me, I'm not giving you, I'm not trying to make your life easier, but believe me, CFDs, in order to succeed in the CFDs trading, there is two things. First thing, you need to get a proper knowledge. Okay. Now, getting the knowledge from YouTube, getting the knowledge from anywhere, it is something easy. And getting the knowledge from a mentor is also something great. But the whole idea, the whole concept when it comes to trading is that the market is not going to reward you for the knowledge that you have. So some people think, some traders think that if I am having high knowledge, a lot of knowledge, if I know everything in trading, this means that I'm going to be much more profitable. Okay? Which is in reality, it's not. Okay? If you are trying to learn every single thing in technical analysis, in fundamental analysis, if you are trying to learn every single strategy, okay, this is gonna end with zero results. Believe me, zero results. Okay, you can try any strategy, you can try anything, and it can work. The whole concept or the whole idea that differentiates the successful trader from the unsuccessful trader is how you are going to execute the knowledge that you get. Execution in trade requires patience, requires accuracy, requires no hesitation. Because if you are hesitant, if you are not entering on time, if you are entering late, if you don't have a clear rules when to enter, when to exit, all of this means what? Means that the knowledge, or you don't have a clear vision of what's happening. So there is a correlation, a strong correlation between the proper knowledge and execution. If you are waiting for the confirmation on the confirmation on the confirmation, and you're using indicators, and you're using price action and ICT and SMC and all of these stuffs, when you are going to execute, there is no 100% accuracy when it comes to knowledge. Okay, so I mean by that, if you are waiting for all of the knowledge that you got to be on one single trade, this is not going to happen. This is not going to happen. So the best thing is what? Is to keep it, I will write it here, keep it simple as much as you can. More simplicity, faster execution, more accurate execution, and we stick to rules, and that's it. This is the best thing and the best advice that I can give I can give it to you, because personally I've tried the indicators, I've tried the moving average crossing with RSI, with the price action, with trend lines, with SMC, all of this. I've tried everything, and now there is no single indicator in my chart. Okay, no single indicator in my chart. So I've created some rules. These rules, I will give it to you in details, and you will get to know what you need exactly, okay, to make it simple and to make your execution easier with no emotions. Okay, do we agree till this point? Okay, okay, that's great. Now, in this topic, we are going to cover three main parts: the reality of CFDs trading, CFDs pros and cons, and what is common among successful traders, which means how can you execute well in trading? Because remember one thing, market is going to reward you for execution, not for the knowledge. Market is going to reward you for the execution and not for your knowledge. Okay. Okay. So number one, let's talk about the reality of CFDs. Now, explaining the CFDs is something very simple. CFDs, it's just like any other product. However, let's not talk about the CFDs itself as a product, and let's talk about the trading industry. Let's talk about the trading industry as an industry. Okay. Now, if I asked you, and please write to me in the chat, do you guys really love trading, or you are just following the trend, or you just want to make an extra income, you just want to make an extra money, but you don't have the passion for trading? So can you tell me, are you passionate really about trading or not? Do you guys passionate about trading, or you just want to make an extra money for that? Because there is a big difference if you want to make an extra income from trading, and if you are looking only to the money. Money is not going to come when you start. Money is going to come later, but it will come. I promise you, I guarantee to you 100%, 100%, it is going to come. Okay. However, you need to give it a time. And why you need to give it a time? Because this is not I cannot say that trading is a passive income. Okay. So if we need to define the word passive income, passive income means that you are doing nothing. You are doing nothing. Okay. There are some people working for you. Your money is working for you. You are just putting the money, and that's it. In trading is not a passive income, and it has never been a passive income. Trading is an active income. Okay, means it's a job, it's a skill, it's like any other skill. There is no skill in the world that will give you money for free and you're gonna not work. Trading is a skill, it's not a passive income, it's not an investment. If you need a passive income, put your money in some stocks or ETFs and leave it. This is called a passive income. However, if you want to define the word active income, okay, or trading is an active income, because you need at least to have 2 hours in the front of the chart per day. The minimum, I would say, the minimum, you need 2 hours, from 2 to 3 hours in the front of the chart. Okay. Now, What time should I trade? What should I trade? How should I trade? What strategy should I follow? All of this is gonna come. Okay, you are gonna learn that. But the idea or the concept here is that you need to be active for at least 3 to 6 months. Okay, watching the asset class that you are going to trade. Okay, and I'll be honest with you. 3 months back, I was like, I follow a one single strategy, and I said, what if I want to make a simple strategy? Okay, for someone who doesn't actually want to confuse himself. Okay, and in order to get that strategy, what I've done, I've been watching the gold, although I've been in the market for 5 years, for almost like 3 to 4 months. I was just only watching the behavior of the gold in a certain specific times in order to create my own rules based on what I've seen. I've created an Excel sheet. I've took the screenshots. I've tested it multiple times on demo accounts and everything I've done. Okay, and I still didn't put my real money to test this strategy on live. You know what? Why is that? Because it takes time. Everything takes time. It's a skill. Okay, I might be announcing that I have my own strategy. So my own strategy, it is not a rocket science. I didn't create something that you will never lose. No, you're gonna lose. But to make something perfect, you need to give it a time, right? So the reality of CFDs trading, it is like any other job. Any other job. Yes, there are some differences between the job and any other and the trading. And now let's compare it, any other job compared to trading. So if you think about football players, right? They take a lot of money. They make a lot of money. And what they actually do, what is required from the football players, is just to work out, to stick to the diet, stick to the regime. They need to work out on a daily basis. They need to eat healthy food, right? If you think about the football player, a successful football player, let me ask you, guys, have you ever thought, really, if you want to answer this question, have you ever thought about the number of football players around the world? I'm not focusing on the Premier League. I'm not saying on any popular football league like Germany, England, none of all that. I'm speaking about the entire world. Entire world. Have you ever thought about the number of football players around the world? Okay, millions, right? Do you guys agree? We have millions of football players. Do you agree or not? Guys, I need some interaction. It's really interesting webinar because in this webinar, I just want to set the right mindset. Okay, so we agree that we have millions of football players. Now, if someone asked you about who is your favorite football player, what's gonna be your answer? What is your mind is going to think about a football player automatically with no effort? We have some few people, some few football players, okay, that they will automatically come to your mind. Okay, maybe you're gonna say Cristiano Ronaldo, number one. Maybe you're gonna say David Beckham. Maybe you're gonna say Ronaldinho. Maybe you're gonna say Ronaldo, Messi, right? Now, what makes these people unique? Why they stick to your mind right now? Because of their performance in the market, because of their skill. Thank you so much. Okay, because of their skill, because of their performance in the market. Now, because of the efforts done, right? Now, Ronaldo, he's still in the 40s. He's in the 40s and he's still playing and he's still performing, right? How come? How come he's doing like that? When you're comparing Ronaldo, Cristiano Ronaldo, to someone else on the 40s, they have, stopped football playing from maybe 30s. But till 40s, he's still fit. He still run, he still score goals, and he's still performing well. Okay? What is the reason for that? He's practicing, 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 and he's keep trying, keep trying, keep trying, keep trying, keep trying, keep trying. Whenever even you are doing well, he's keep trying. Okay, he never, he lost the World Cup. Did he give up? Did he stop? No, he didn't. He still. Okay, Messi, he won the World Cup. He won the best player in the world multiple times. He won everything, but he still plays football. This is the passion for the industry, for the football, right? So in trading, we do have billions of football players, but there is one or two or three or five or six people or players who will stick to your mind because they exercise, they have a passion. When they handle a loss, like for example, Cristiano Ronaldo, he lost the World Cup, and this is one of his main dream. Okay, he started in a different country and he's still trying. Okay, and they are consistent in their performance. Now, let's compare the football players to the trading. Now, these are the traders around the world. Okay, all of these people in the picture are traders around the world. However, how many of them are consistently profitable? These are the number of the football players. These are the number of the traders around the world. And guys, please do not believe those people who comes on Instagram and they tell you, I just only trade this candle, I just highlight the high and lows and that's it. It makes it very easy. No, it's not like that. Okay, there is no proof that you are consistently profitable. So these people are 95%. Now, out of these people, okay, maybe this, maybe this, maybe this, I don't know, okay, they have or they share common features. These features are proper knowledge. Not too much knowledge. I said proper knowledge. Practicing, they handle losses. If they lost, they accept it professionally and they do not give up because you must lose. You must lose. There is no option. Okay? And they have a plan, they stick to it. Now, if we are comparing, now I hope can you define consistently profitable? Okay, consistently profitable means that on average, you end your month with a profit. You end your month with a profit, or you end your quarter with a profit, because I cannot accept or I cannot calculate my profit and losses on a daily basis. This is not acceptable. Okay, I would say I have a month, okay, a trading month, 22 days. On average, on these 22 days, I am on green or I am on red. I am in win or I am in loss. If you are in win, even with $100, $50, okay, you are profitable. You're still making money. You lost 5 trades, you won 10 trades, you lost 10 trades, and you won 12 trades, but you have a big RR, okay, risk to reward, and you're still profitable. You are profitable. Okay? Profitable means that you are not losing your capital, you are not blowing your account, you are able to manage your risk, and you are making consistent profit. Maybe 1%, 2%, 0.5% a month, I don't care. You're just making money. This is consistently profitable person. And if you are a consistently profitable person, so you can describe yourself, these people are average. And this person is always gonna be above the average, because making money from the financial market, okay, it is the most difficult thing. To be honest, this is the most difficult thing. Now, you'll ask me, trading is easy or difficult? Can anyone answer this question? What do you think? Trading is easy or difficult? Very difficult. Okay. Can you define? Okay, again, both difficult. Okay. Now, guys, I agree it's difficult. I agree 100%. Trading is easy, emotions are hard. That's it. 50-50. 100%. 100%. The whole concept of trading, okay, it's really, really getting the knowledge, getting the strategy, getting everything. That's easy. But when it comes to psychology, when it comes to your emotions, handle the losses, that's the part. That's the part. This is where you need to train yourself. This is where you need to practice. Okay. And the best part about trading, that this part actually makes you a different version, a different version. You are under a pressure. You are doing something that is against the human nature. Human nature, we love money, we love easy money, we love everything. Now, trading is going to give you easy money. It's going to make you work for 1 hour or 2 hours. It's going to give you freedom. It's going to give you everything. But there must be a cost for that. The cost for that is your patience, your execution, handling the losses professionally. These are the costs. If you are able to master these things, that's done. Over. Okay? That's the whole thing that you need to know. How much capital is enough just to trade? Now, guys, I cannot say that trading is made for $500, $1,000. This is not gonna, it works. Yes, it works, but it's gonna take a lot of time, and it's eventually you are a human being. You are a human being, and you need to feel the success. Okay, you cannot wait for 5 years or 6 years. Or if you put a $500 in your account, okay, let's say you have a $500 in your account now. Tell me honestly, how much would you able to make on a $500? If you're going to stick to the professional trader rules, which is 1 to 2%. If you're going to stick to 1 to 2%, which means you're going to risk $5 to make a $10. Now we have 20 days. 20 days times 5, I'm assuming that you didn't lose, it's $100 per month. Okay? That's nothing. Now, how much do you need actually if you are a professional trader? At least anything $5,000 plus. However, you can start with 500. You can start with 1,000. You can start. I'm not saying that you cannot start. No, you can start. But why I am preferring the large capital? Because the large capital, first of all, it removes the pressure from you. It means that if you put that money that you don't need savings, okay, that's not gonna, destroy your liabilities. It's not gonna destroy your liabilities. $5,000. This is gonna give you space for mistakes, okay? But on $100, on a $500, there is no space for mistakes. There is no space for mistakes, okay? If you made a mistake, your emotion is gonna click, and once your emotion is gonna click, believe me, you are going to forget every single rules that is made for professional traders. So there is no 1 to 2% risk to reward ratio. There is no 1 to 2% per trade. Nothing. You're gonna risk 50%. Okay, and if it doesn't work, and if you make it, a wrong execution, then your account is done over. That's a blown account, and then you start psychologically. You would say, that's not working. Actually, it's working, but you are not giving yourself enough space. You already in a high risk investment. So in normal thing, if you go to any industry that is high risk, okay, stocks, okay, ask any financial advisor, not a trader. If you're going to any risky investment, they will tell you that this investment is only available for qualified investors or professional investors. Now, what is the definition of a qualified investor? The qualified investor is anyone who has knowledge and experience and have large capital. This is the definition in the books, okay, of the qualified investor. Now we are coming to the CFDs. CFDs, it is one of the riskiest industries ever. It's a derivative, riskier than stocks itself. How come you jump to this industry with a $500? It does not make any sense. Okay? So proven by science, it's not going to work. Okay? Okay. Now, what you should do, what you should don't do in trading. Number one, we do not start with trading with real money until we do have our rules and we practiced the rules. We start on a demo account first. Now, there is a pros and cons also for starting on a demo account. In demo account, you are not under test. You are not under pressure. Okay, demo account, if you lost your money, that's right, it's fine. Okay, I'm gonna deposit another amount of money again. But in real account, yourself, your emotions are under test. If you need the money, please do not trade. If you think that you're going to put $100 to make them $1,000 in a day, please do not trade. If you need the $1,000, okay, and you're not able to borrow from your friend, or you have a financial obligation or whatever, please do not trade, because you're going to lose them. The market does not know what is your obligations. The market rewards the execution. I don't care if you need money, the market does not see you. Trading one strategy, only one strategy, one single strategy, no more. Do not trade with the small accounts, and this is the answer for your question, guys. Small accounts, they are not going to help you as a trader. They will, I would say, trading with a small account is gonna actually demotivate you from trading. Okay, because eventually we jump to this industry to make money, right? So if you are making just a $3 or a $5 or a $10, in a month, it's worthless, right? Educate yourself, get a proper knowledge, not too much knowledge. Do not borrow money to trade ever in your life, because this has cost me 4 years. This mistake, it cost me 4 years of paying a debt. Okay, and I'm being very honest with you guys. I've been in debt 4 years, and this is because of trading. Okay, so never ever in your life trade with a borrowed money. It should be your money. It should be your capital. It should be the money that will not, make any extra financial burdens on you. If you lost it, that's fine. You still can able to support your family, to support yourself, to pay your rent, to pay your bills. Everything should be stable. What do you mainly trade in Forex? CFD, ATC. So CFDs, it's like CFDs, like I trade gold. I trade gold and GPP USD. That one I trade. All right. Okay. Detaching yourself from the fake social media, because this is the worst thing that you can ever attach yourself to. Okay. No supercars on trading, no Rolex, nothing will come like that. Nothing. There is nothing like this in trading. Nothing. Okay. It happens. Yes, it happens. It happens. But it's 10 years, 20 years. It takes time. I don't know. Okay. But I'm here, guys. I don't wear a Rolex. I don't drive a Porsche. I don't drive a Lamborghini. Okay. I'm just a normal person like yourself, guys. And that's it. How does the PU power credit? What is the PU power credit work? You mean the bonus? You mean the deposit bonus? All right. Do not rush the process, and do not tell anyone that you are trading. Please, guys, do not tell anyone that you're trading. Please. Okay? Until you make it. Don't tell anyone that you're trading. Never. Okay? Do not trade if you don't accept losses. Okay? So these are the characteristics that you need to, that should be your mindset. Okay, guys? Do we agree? Do we have any question in this part? Any questions so far, please? Any question? All good? Danish, I didn't get your question. How does the PU prime credit work? PU power credit. I don't know what's the credit. What's the credit? You mean the incentives or the deposit bonus? If you mean the deposit bonus, it depends on the region. So in the Middle East, we have 30%. In some region, we have zero. In some other regions, we have, yes, in some regions, we have 20%. In Europe, we have 100%. So it depends on which region are you in. Bonus for UK region, I think it's 100%. I think it's 100%. But you can ask your account manager, okay, because they changed the deposit bonus scheme from one region to another. So I think UK, according to my information, it is 100%. For Africa franc, it is 50%. Okay, but you guys need to check with the account manager before you apply for, or you build your expectation based on that. This is according to my knowledge. There are some certain regions that it might differ. So please check with your account manager. Okay. All right. Now, topic number 2 is the CFD's pros and cons. Now, what is the CFD? Okay, in a very simple term. So if I have two persons here, John, a lawyer, he doesn't know a lot about the economy, about the financial markets, and we have David, who is a banker, and he knows a lot about the industry and he knows about the financial market, stocks, gold, all of these stuff. Now, if I want to understand why we call the CFDs contracts for differences, the concept is simple. Now, these two guys, okay, they are friends, and they were speaking about the gold prices. Okay, now the gold prices is the most trending topic that anyone speaks about it right now, right? So the gold has reached 5,800 and now it is 4,500, right? So we don't know where the gold is heading to, but most probably it's going to continue the selling pressure until we have a clear certainty in the market. Geopolitical tension is over, the Israel and Iran war and US war, it's over. All of these things should be finalized in order to say that the gold is going to go up again. But for now, as you can see, it's a selling pressure on the gold. And there are some countries, okay, that they have started to sell their gold, like Turkey, for example. They have sold tons of gold, okay, 2 weeks or 3 weeks back. And this is making a selling pressure on the gold. Now, regardless of the technical analysis, we are speaking about the gold. Now, these two guys, David and John, David said, now, because he knows about the geopolitical and the key factors that affect the gold prices, he's expecting that the gold price is going to go up. John is expecting that the gold prices is going to continue to push down. Now here we do have two different point of views. Someone is expecting a bullish momentum. Bullish means going upward. Okay, bearish means going downward, right? Okay, so they said to each other, if we need to make a speculation on the gold prices, do you challenge me? Do you bet? Let's speculate. Okay, so David said, okay. John said, how are we gonna make it? Okay, should I sell the gold that I have in the home, or should we buy a gold and we make the bet on it? He said, there is no need, we just gonna write a piece of paper, a contract. And I said that, David, if the price goes up, I will take money from John. And John, if the price goes down, I will take money from David. All right? So if the price goes up to 4,210, now who should be in profit? The one who expected the price to go up or the price to go down? Huh? What do you think, guys? It should be definitely what? It should be definitely David. He should be in the profit. So David has entered his position as a buy and a 4,200. Now the price goes to 4,010. Now this is the difference. And this difference is actually based on this contract. So there is no physical gold that we own. We just wrote the gold here and we are waiting the difference. And that's it. The other guy is going to lose $10. That's it. That's the whole concept of the contracts for differences. Okay. Now, if you are executing well, you will get the difference. You need much more difference. You need to enter at a perfect time, 4,200. The price goes to 4,210. That's 100 pip. Congratulations, you made money. That's it. Okay, so it's gonna continue like this. Okay, until we have a winner, a profit, or loss. So this is the concept of the contracts for differences. So contract for differences, guys, it is high risk product. Okay, and it is under something called derivatives. And derivatives, it is one of the riskiest products that you can trade in your life. okay, in the financial markets in general. And this is why derivatives anywhere in the world, it is only available for qualified investors. Any questions so far on the CFDs? Did you get the example? All good. In trading, what do you mean this tick 1 minute, 5 minutes? In trading, what you mean this tick? You mean tick or you mean time frame? What is the average win rate for the professional traders? There is, Patrick, I cannot answer this question because there is no single answer for the professional trader. So for example, I can be having a 33% winning rate, but I'm still profitable. And I can have 85% winning rate, and I can be not profitable. So the best trader on the world, okay, he has 45% winning rate, okay, and he was the best trader on the world. So the winning rate, you have to combine the winning rate with the risk to reward ratio, because answering the question of Patrick here, please guys, if you have 5 trades, so these are the number of trades that you take per day. Okay, let's say you trade 5 trades a week. Now, if you are losing 100, losing 100, losing 100, losing 100. Now, you lost in the 4 trades $400. What's your winning rate? So out of 100, okay, let's assume that this last trade, okay, you've made $600. So you lost 400, you made a profit 600. So your net is how much? $200. Are you profitable or not? You are profitable. However, what is your winning rate? Your winning rate is 25% or even less, maybe 15%. This is your winning rate. Did you get my example, Patrick? Thank you, Kathy. Yeah. What is a qualified investor? How do I become this UK region? Danish, there is nothing to be. There is no. See, the qualified investor is just just a expression. It's like a professional trader. There is no qualifications needed to be a professional trader, right? But there is knowledge. Okay, there is execution. There is a high capital. So that's it. Okay, so when I describe someone as a professional trader, I know that he has some rules. I know that he has the knowledge. I know that he has the capital and he's making money. That's for me as a professional trader. So the qualified investor is just an investor with some knowledge in the financial markets and have a high capital, large capital. And that's it. Okay, so you don't need any qualifications to do that. In order to be a professional investor or a qualified investor, you need to have a capital and you need to have a knowledge. That's it. No qualified needed, no certifications, nothing. Right? Okay. 20%, 1 to 5 successful trades, 100%. Yeah. He's making money. He makes money because he has a high risk to reward ratio. He might be losing 4 trades, 100, 100, 100, 100. He lost them. And the last trade, it was a successful trade. He made $700, $800. It works. He doesn't need more trade to be profitable. He just need 1 trade out of 5. But this definitely is gonna not work for a scalper. Scalper usually has a risk to reward ratio of 100 to 100, 1 to 1. So I lose 100, either I win 100. So if you are losing 4 trades out of 5 and your risk to reward ratio is 1 to 1, you are definitely going to be in loss. So you are not successful. So when placing a trade to buy or sell gold and amplify, that is CFDs. Yes, Nemish, yes, 100%. So CFDs, it is what you see here. MT5, this is MT5. Okay, this is MT5 platform. which is connected to your broker. Okay, whenever you are going to execute a trade, okay, whenever you're going to execute a trade, because here you are in MT5, you do not buy physical gold, you do not buy stock, you do not buy anything. You just speculate on the price. You just speculate on the price. So this is a CFD. This is a contract on the difference of the gold prices. Do we own gold? No. So how can you are not owning a gold? Okay, so let me do just 0 point anything 50. Okay, how you can do not own a gold and you can sell it? Okay, I cannot sell something without owning it. In CFDs, you are not owning anything, so that's why you can sell. Okay, this is known as short selling. So this is CFDs. Anything that's related to MT5 with the broker, this is a CFDs. Okay. All right. Let me go back to the chat. What is the CFDs trading? We've just explained the CFDs trading. CFDs trading is simply as buying and selling an MT5. So everything that you can see here in terms of quotes, all of these currencies, you cannot buy them physically. You are not buying euro, you're not buying gold, you're not buying silver, you're not buying anything. This is no physical assets. It is just the price in front of you. And we are speculating on the price. If the price goes into our favor, we take the difference. So if the price is 4,200 and it jumped to 4,210, I made a $10. Now, where's the asset? I don't have the asset. I just speculate on the price. This is CFDs, what CFDs trading. Now, let's continue. What are the benefits of the CFDs trading? And this is the most important part, the leverage. Now, why people now they become like, aggressively looking to become traders? Because trading is not like a traditional investment, to be honest with you. Now, if you would like to buy a real gold, physical gold, okay, let's say 1 ounce, 1 ounce of gold. Okay, how much you need to have in your account? $4,500 to buy a physical ounce of gold. You need to have $4,500 in your account, in your bank account, in your pocket, in your savings. Now, I can buy more than 1 ounce of gold by $100. I can do that. What's the idea? The idea is something called the leverage. So what is the leverage? So let me give you an example. Now, if you deposit $100 in your trading account and the broker is going to give you some choices, which means what? Which means that he's going to tell you that if you choose a leverage of 1 to 1, so what is a leverage? A leverage is a money that you borrow from the broker, a money that you borrow from a broker. Now, leverage 1 to 1 means that every $1 I have in my account, it will be multiplied by 1. So 100 times 1, it's 100. Now, if you can buy gold at the current prices, 1 ounce, just only 1 ounce, which is 0.01, okay? If you would like to buy gold at 4,200, are you able to buy something that is worth 4,200 at $100? Can you do that? Can you guys do that? Tell me. Where is the... Yeah, it's here. Can you do that? No, you cannot. You cannot. You cannot buy something that's worth $4,200 with just $100. Okay? In normal investment, you cannot. You cannot. You cannot do that. In real life, you cannot do that. But in CFDs, you can. You know why? I'll tell you why. Because if you deposited $100 with your broker, the broker can give you a leverage of 1 to 100 or 1 to 500, which means what? Which means that this 100, it is going to be multiplied by 100, which means that you have $10,000. Now, this $10,000, just guys, please take care of this because this is very risky. This is very risky here. This $10,000 that you have here, you only, as a trader, you own $100 of it. The remaining $9,900, this is a loan. It's a loan and you're not paying interest on that, but the broker gives you the money in order to be able to open your position, to click buy, to click sell. Okay, so this is an extra money that you originally, you don't have it. And if you don't have that amount of money, you shouldn't expose yourself to that risk. So basically, let's go to the basic example here. You just have $100. You cannot expose yourself to the risk of the financial markets. You cannot buy gold right now. You don't have the capital. You're not qualified to do that. Now, I will make you qualified. I will give you the remaining amount of money. But remember, if you lost this money, because it's a very small capital that is exposed to a large and huge risk. And you see, guys, the gold chart, okay? Okay, $100, if we go here to the 30 minutes time frame, okay, cannot, sorry, $100, guys, cannot survive in this high volatility. That's a huge volatility happening in the market, ups and downs, ups and downs, ups and downs. The $100 cannot survive in this. In order to survive in such market, you need a high capital. Now I'll tell you one thing. Give me the $100. I will lend you 9,900, so you have a 10,000. But try to survive in this market. If you survived, you will make a huge amount of money with $100 because you bought something that is worth $4,200 for just $100. But if you lost, your $100 is gonna vanish in nanoseconds. Okay, so now you act as if you have $10,000, but honestly you just own 100. Now, if you would like to buy gold at $4,200, definitely you would be able to do that. But the risk is huge and the profits are huge. This is why CFDs becomes very popular because you do not need to have the full amount to invest or to start trading. Is that clear, guys? I hope I simplify the concept. Can I control request to lower leverage from the broker? Is it set? Yes, 100%, 100%, Patrick. You have the option to have 1-to-1, to have 1-to-10, to have 1-to-1,000. It is up to you. Thank you, Shamisu. Thank you so much. Thank you so much. Okay, it's up to you. Okay, now every broker has their own leverage. For example, some other brokers, they provide unlimited leverage up to 2,000, which is too much. Some people, I would explain them the gambler, they use it, but that's fine. Okay, the best type of leverage is that you cannot exceed 500. You cannot exceed 500. That's the best thing. Okay, and 500 is also too much. Okay, 1-to-100, that's it. Okay, because the more leverage that you're having, it means that you have more capabilities to expose yourself to more risk. So more leverage, you are exposing yourself or your money to more risk. So 2,000, as if you have 20,000 right now. You have 200,000 and so on. And you just have $100. This does not make any sense. Okay? Okay. All right. Now, definitely the best thing also about the CFDs trading, it is you can buy and sell. Okay, so you have two options. You can buy and you can sell. If the price is going to go down, you can sell. You can make profit. If the price is going to go up, you can buy. Now, compared to traditional investment, you only can buy. You only make profit when the price goes up because you cannot sell something that you don't own. In CFDs, no, you can. All right. So, for example, in Asia session, I took this trade in Tokyo session in the morning. This was a trade that I took, okay, and I made some good amount of money. Okay, it was this one. Yeah, so I sold. Okay, I have the option to sell. If I don't have the option to sell, then how can I make money? Right? Okay, that's great. So you can make a profit from buying and you can make profit from selling. No ownership of assets. You don't own anything. Wide market access. You can trade whatever you want. 24/5 trading. You can trade all the day. But this is, guys, if you think about the CFD's pros and cons, the pros are the same as the cons. So leverage is good, okay, because it maximizes your profit, but at the same times, it's a drawback because it can vanish your capital in no time. Okay, long and short positions. In traditional investment, you only long, so you're exposing yourself to the risk of only if the market goes down, then you are losing. Now here, you're exposing yourself to more risk. If the market goes down and you clicked buy, you're losing. If the market is going up and you're clicking sell, you're losing. So there is a more probability to more losses. All right. Um, no ownership of assets. That's fine. Wide market access. You can trade anything. 24/5 trading. That's the worst thing, because some people think that if I want to make money in trading, guys, what people do. I'll tell you one thing. One very bad thing. Okay, what happens to the $9,900 loan if I lost? Nothing, guys. So what's gonna happen is just you are gonna lose your $100 and that's it. You're gonna lose. You don't have to pay the remaining amount of money because anyhow this is not reflected on your bank account, on your trading account. So guys, for example, let me just explain the leverage in a very simple thing. Now let me open a demo account. Okay, so I'll just open a demo account here. Let's say, okay, so I'll just add a $10,000. Now here you have the option to choose the leverage, whether 1, 3, 5, 10, 15, 25, and so on, up to 500. If you choose a leverage of 1, okay, this means that you only have the $10,000. Like if you choose a 500, now let me open the demo account and let's see how much I have. I still have the 10,000, but it is now, okay, on your mind as if you have 100,000. So you can buy more positions. You can open more lots, okay? You can go to the gold, okay, and say, for example, I will buy 3 lots, which means 300 ounces of gold with just $10,000. Can you imagine? Okay, so I can buy. Yes, I can buy. So can you buy 300 ounces of gold with $10,000? No, but I have leverage. I have what? I have leverage. So I click buy. Now it works. It's working. I can buy. Okay, but if let me now open a trading account and okay, I will open a new demo account. Okay, here, and I will make this $10,000, and I will make it a 1-to-1. Okay, this is a 1-to-1. Okay, now I will go to the gold. I'll try to place 3 lots. Okay, let's try to buy 300 ounces. You don't have enough money. So in the previous account with the 500 leverage, I bought it because I have more than 10,000. But if I lost the 10,000, they will ask me for anything? No, you just lost your money. That's it. Okay. Did you get my idea? Are funded accounts the way to go? Funded accounts is really you need to be professional. Really need to, it's made for professional traders. Are you saying that you cannot trade CFDs without taking advantage of leverage? That's the best thing. You need to take the advantage of leverage, but you need to know how to use the leverage. Okay? You need to take the advantage of leverage because yes, it's an advantage, but how to use it? Because if you are not able to use it well, it will become a disadvantage. What time frame you executed the sell on its Asian session? It was a 5 minutes. Are funded accounts the way to go? As I mentioned, you need to be professional and you will keep trying and trying and trying. And some companies, you can enter or you have a funded accounts, you pass the phases and then you might deny your payout and so on. So if you want to start to learn, just start with a $500 in your normal account and try just to make $25 per month. That's a 5%. $25 from a $500. Just don't aim for profit. Just make 5%. If you made a 5% for 3 months, 5%, 5%, 5%, go for a funded account. You can do that. Okay. Now, execution with confidence. Guys, so if we come here to the execution with confidence part, now the best thing when we execute with confidence is that you have a clear rules. Now, I'll show you one thing that is the strategy that I'm testing right now. And this strategy actually has made everything easier, looks easier. So it's in the Tokyo session. Okay. It works in any session, by the way, but it has a specific timings. So for example, I want to see the opening of Tokyo session, which is 4 p.m. Dubai time. What I've created, what my own rules that I have created is that I'm going to highlight the opening session, the opening candle, the 5 minutes candle for the Tokyo session, like this. So this is the high, and this is the low of this candle. Now my rule says, if there is a candle has broke above the high of the opening candle, I'll highlight the high like this. Okay? If there is any candle that breaks above this high, that breaks above this, dotted white line, I'll buy. I will buy. If no, then it's gonna break down. Okay? So where is the candle that has broken below this yellow line? It's this one, this candle here. It's the only candle that breaks below the zone that I have highlighted. Now I will mark the low of this of this candle, right? If there is any candle that breaks below this low, I will enter a sell. And here you can see I'll just make a short position. I'll enter here. I'll put my stop loss above the previous candle like this. And I will aim for 1 to 2 risk to reward ratio. Now, what you can see is that the price has actually, oh, wow. This is insane, right? If you go for the previous day in Tokyo, okay, so why I'm saying that, because you need to trade with confidence. Now, what makes my confidence is that I have tested this multiple times and I'm still testing it. Okay, so this is the opening candle of Tokyo, the 5 minutes. Okay, I need a candle to break below or above. Now, this candle, it has a wick below. There is nobody, so I'm not gonna enter. Where is the candle that breaks above? It's this one, right? So I will highlight the high. If there is a candle that has break above the high, I will just buy. And you can see the magic. Long, I will enter from here. My stop loss go below the previous candle, and I will aim for 1 to 2 but it will never give you 1 to 2. At minimum, it will give you 1 to 13 risk to reward ratio. Right? Guys, please, please, please do not trade this until you test it by your own self, because this is very simple thing, and no one on YouTube, no one is anywhere has mentioned this. Okay, so I'm trying to figure out something that is very simple, and the idea is it work? Sorry, I had a call. Can you quickly go over? Let's us go through the strategy again, please. So guys, just to explain it. Okay, so I wait for the Tokyo session. Okay, opening. This is 4 a.m. Dubai time. 4 a.m. Dubai time. 4 a.m. Dubai time. Okay. I highlight this candle, highs and lows. If there is a candle that breaks above this high, I highlight. I need a body, not a wick, to highlight this. If there is a candle that breaks above, then I go for this. Now, just to show you one thing else, if we go to, sometimes it's not working, okay, but it will give you the profit that you want at the end, okay? So for example, here, I will do the same thing. Okay, so this is the opening. Okay, now I highlighted the 4 p.m. Dubai, 4 a.m. Dubai time. I need a candle to break above. I need a candle to break above or to break below. Now I highlighted this candle. Okay, and I bought. I should buy from here. My stop loss is gonna be below the previous candle, right? Okay, at that point of time, my stop loss got hit. But no worries, that's fine. I lost one time. Now I need a candle to break below. So there is a candle that breaks below. Can you see? It's this candle. Okay, I have highlighted the low of this candle, right? And then I will enter into a sell, short. I will enter from here exactly. Okay, my stop loss is gonna be below this candle. Okay, and boom. It is 1 to 3. Now you lost here nothing. You won, and you're not even at break even. You are in profit. It's a simple strategy. Now you would tell me, is this a strategy based on science? No, it is just based on pattern. It's just a pattern. It's the behavior in the market. The issue is the patience. Yes. So this is an orb. It's something related or similar to the orb strategy, but the orb strategy, it usually have different timings, different times. And usually people wait for the 9:30 a.m. candle for the New York open session, but no one speaks about Tokyo session, especially in gold. It's one of the best thing. Okay. Look there for bio carpet trading. Yeah, sure. Now, guys, the last thing, please. This is the most important part of this webinar. I would like you guys, if you have the PU Prime account, so we have softly launched PU Prime community. What you need to do is that you need to enter your email, your password, and then you will go here to PU Prime or PU Prime community. You will find this tab, PU Prime community. And then PU Prime community, it will open this landing page. You write your name, your time zone, write anything about yourself, and then press continue. And then you will have the community of PU Prime that I have told you a lot about it. Now, in PU Prime community here, everything that you can see, ask the analyst. If you would like to ask me personally about your trade setups and anything, you can do that. Okay, I will be answering all of your questions whenever I check it. And the best part, it's the education hub. I have created all of the lessons that you need to build the strategy that we should use it on live trading. Okay, and here, for example, explaining the candlesticks. This is a recorded sessions on the candlesticks. what are the candlesticks, how you can read the candlesticks, and I'm giving you a profitable setup that you can use it in order to trade. Now, can you see, guys, here the candlesticks that happens and the resistance and so on? So I'm creating some scenarios. If something happen, how can you react to this? And you'll learn it. This is my strategy. The main strategy is the support and resistance. And what happens is that, for example, I will keep, where is the traders? Yeah, here. Okay, so it was something that's really happened. It is the same scenario that we have delivered in the courses. It is here on the happened on the real life. So I told you guys there must be a breakout and there must be then a retest, and then we go up. Happens again the same thing. The candle closed without a wick, as you can see here. No wick, no wick. I've mentioned there is a retest, and then the price continued to push up. This was something that happens in real life and something that I have prepared a course for, the very simple strategy of support and resistance. So you need to follow up of this strategy. Yeah, the win rate is 85% of this strategy, almost 85%. All right, guys, that's it from my side. Please do not forget to register yourself in the community. It's for free right now, so you can go in and watch the videos. You're gonna like it. Open from the laptop, you will find the PU community, and I'll see you again in once the community being launched officially on 30th of April, tomorrow. We will be doing some live trading together, and I promise you that you will start to make some money when you make it simple. Just that. Thank you so much and have a lovely day, everyone. Thank you, guys. Thank you, everyone. See you.